Stop that dollar!
Before you invest your next dollar, stop. Because where you choose to invest those dollars can mean the difference between tax-free wealth and paying a ton of your money in taxes and fees.
Stop wasting money on that dumb shit and instead put it in investment. I know it's tempting. You'll spend it and be broke again.
Welcome back to the channel, guys. It's your bro Taylor.
And your bro Ryan here.
And today we're talking about the advantages between a Roth IRA and a traditional brokerage. Because a lot of people are like, why would I bother investing in a Roth IRA? I can just open up a Robinhood account. Well, in today's video, we're going to be going over exactly why you would choose one versus the other. And starting off with what might very well be the biggest reason someone would choose a Roth IRA over a traditional brokerage are the tax exemptions. The Roth IRA has the ability to grow tax-free, and in retirement, you're able to withdraw it without any taxes. That's huge. As opposed to a traditional brokerage account where you're going to have to pay taxes on your dividends, your capital gains, and things like that every year, or when you sell that stock. And of course, over time, this makes a huge difference. What a lot of people refer to as the tax drag for your brokerage account can reduce your long-term growth by 15 to 40%.
Yeah, tax-free growth in retirement is unbeatable. Like, that's pretty incredible. Where you don't even have to worry about that factor where, well, if I have this much in retirement, but I got to account for taxes of this much, so I really only have this much. You don't even have to worry about that stress. And even before retirement, there's some benefits to the Roth IRA. So reason number 2 why the Roth IRA might be the choice is you can withdraw your contributions tax-free as well. And let me specify or emphasize that point again. This is before retirement. So anytime you can withdraw your contributions, not what it's earned, but just what you've already put in, almost like a little savings account. As much as you've put in, you can take out penalty-free, tax-free, anytime before retirement. And that is an incredible power.
Yeah.
I do want to specify this is not necessarily recommendations from us or advice. This is just how you can use that power. So you can use that ability to be able to reach in and pull your contributions out as like a backup emergency fund. But it is really cool power because a brokerage account, you can't do that. You would have to sell stocks or you'd have to liquidate something, which then triggers a tax event. You got to pay your taxes on that stuff. And then you get only a portion of it back. So again, it's super cool, super awesome that you're basically creating a savings account. But if you don't use it, it just goes towards your tax-free retirement.
Yeah, so as you can see, there are a lot of tax benefits of going with a Roth IRA. Now, this next reason you might want to choose a Roth IRA over a traditional brokerage is going to require you to make a bit of a prediction, which I know can be difficult, but it's really a matter of, okay, right now I'm in this tax bracket, let's say, but in the future I expect to be in a much higher tax bracket or my taxes are higher. Well, then right now might be the time you want to take advantage of something like a Roth IRA because it is made of money that is post-tax. So you get paid from your job and all the income taxes and everything gets taken out and then you invest it and it grows. So right now when you're not getting taxed to such a high degree is kind of the time to use it. In addition to that, if you just think the overall tax rates are going to be higher in the future, again, now might be the time to take advantage. On the other hand, brokerage accounts don't really offer any tax advantages on the way in or out.
Now, I hope so far we've done a good job of emphasizing how good a Roth IRA is and how powerful it can be, but the government also knows how powerful it could be, so they set limitations. So looking at some of these limitations, for example, who can invest in a Roth IRA? So the income limits as of 2026, to be able to do a full contribution, fully fund your Roth IRA, a single individual needs to make less than $153,000 a year, and married couples filing jointly need to make less than $242,000 a year. Once you get over those numbers, the amount you're able to contribute slowly decreases. For a single individual, they need to make between $153,000 and $168,000. And for a married couple filing jointly, they would need to make more than $242,000, but less than $252,000. Then once you go over these limits, you are no longer able to contribute to a Roth IRA. Now we know who can invest in a Roth IRA. How much money can we put into a Roth IRA? If you are under the age of 50, you can contribute $7,500 per year. And if you are over the age of 50, as of 2026, you can contribute up to $8,600 per year. Brokerage accounts, on the other hand, have no limits on income and no limits on contributions.
Now, in addition to those limitations, if you remember from earlier, we mentioned that you're able to withdraw your contributions tax-free. Well, that kind of insinuates the fact that you can't pull out your earnings without facing some taxes and penalties. So let's say you contributed that full $7,500 in 1 year, and the next year it grows to say $8,000, and you withdrew that full $8,000, you're going to be paying penalties on that $500 worth of earnings. Now, this last and final limitation might not come into a play for your average investor, but we did want to cover it. Brokerage accounts typically offer a few more options like options trading, margins, futures, and certain high-risk assets that Roth IRAs typically don't get involved with. Now, for your average investor like us, that really doesn't come into play, but if it's something that interests you, then a traditional brokerage might be the route. Now, in summary, why might you choose a Roth IRA? Well, if you're really looking for that tax-free growth towards retirement and you like the flexibility of being able to withdraw your contributions, then the Roth IRA might be the route. And again, if you think that taxes, whether you're in a higher tax bracket or just taxes rise in general in the future, now might be the time to take advantage.
Now, when might a brokerage account be better? If you want unlimited contributions, so you don't want to worry about hitting a ceiling, or you are a high income individual and you've already surpassed the fact that you can't get into a Roth IRA. Those are times the brokerage account would be better. Also, if you have a shorter time horizon, you're not really projecting out looking towards retirement, but you're looking at a 1 year, 6 month investment, or you want flexibility in your investments. So you want to make a high risk, hopefully high reward, short term return on investment, and then that way you can pull that money out right away. You will pay your fair share in taxes there, but you're not looking all the way to retirement and the earned income on that. You want those return on investment now.
Now, we're not saying you should choose one over the other necessarily. It's a very case-by-case basis. So ask a professional, do your own research. But as always, we appreciate any feedback you guys can offer. If you're like, oh, I love my Roth IRA, or I love investing in some risky options trading or day trading something, so I use my traditional brokerage, let us know down in the comments below. We love hearing what people are doing. Might give us some ideas about some things to look into ourselves.
Yeah.
But as always, we appreciate you guys. Be sure to like, subscribe, and stay tuned for next week.
Stop with the money on that dumb shit and instead put it in investment. I know it's tempting, you'll spend it and be broke again.